Hey guys, this is Dave with Moniology. Hope everyone is having a great weekend. This is the weekend market review for September 30th and October 1st, 2017, where we're going to take a look at some of the most important sectors that are moving the markets from daily, weekly, and monthly perspectives. And it's important to look at these so we know what's going on and remove some of the short-term noise. We want to invest in the hottest sectors, and we want to avoid the weakest sectors unless we're shorting. So let's have a look at what's going on. First, we're going to start off. We have a weekly ETF list here. We have all the major ETFs in the market, and we're going to look at some just a general summary of some of the hottest and weakest sectors in the market. So taking a look here, lithium is absolutely hot. Here it's got a scooter ratio of 99.6, followed by Asia, China technology, China consumer, biotech, China sector internet, China real estate, Brazil small caps, Austria, Nigeria, Italy, again China. Then you've got some aerospace, defense, robotics, internet, global social media. Looking at some of the top performers over the last week, you've got Nigeria 3.12%, you've got Brazil almost 3% here. So what does this tell me? This tells me that that you have emerging markets are really doing exceptionally well, led by China, mainland China. You've got some commodities. I mean, lithium is fantastic. Nigeria, by the way, for 3 to 5 years was one of the worst performing ETFs, and now it's actually doing well. We might take a look at that in some future video. Looking at the weakest ETFs here, we've got we've got a lot of these commodities here in terms of sugar, coffee, uranium's been acting a week of late, natural gas, silver, platinum. So commodities have been poor over the last couple of weeks. And so if you're a contrarian, here's where you want to be looking. And if you're a momentum, you want to be riding those waves in emerging markets there. But I believe that over here we're going to find a lot of opportunities over the coming weeks, and so commodities, a couple of currencies, but for the most and some bond funds. But for the most part, you've got emerging markets leading, and you've got commodities and currencies as poor ETFs. Now, taking a look at the major sectors, we'll start with the 10-year Treasury yield. We'll try to go quickly run through this, but bottom line is yields are breaking out here. You're going to see this here. You broke out of this multi-week downtrend. We're in an uptrend in 10-year Treasury yields. You look at the weekly. This is basically the pattern that we've been talking about for months now. It's a bullish flag pattern that's been taken out, broken to the upside, and now we're starting a new leg higher. And it's been 3 weeks of new yield highs, and we're about to break higher on the MACDs. So that is very, very valuable. Now, what often happens is you break out higher on the MACDs. Then you get the speculators jumping in, and then boom, we're going to have a shakeout. Probably retest this downtrend from the upside. But bottom line is, stay away from fixed income unless it's part of your overall asset allocation. There's going to be a lot of weakness in those sectors that are perform poorly when interest rates go higher. Monthly chart. We're still in this pattern here, bullish flag pattern on the monthly, but on the weekly we've broken out, and we believe we've begun a secular uptrend in bond yields. So Jeff Gunlock, we're on your side here, and we're likely going to this 30 mark at some point within the next 12 months. So pretty substantial move to the upside in Treasury yields. Gold daily. Gold's been weak. No surprise there when we broke down from this uptrend here that we started in early July. Now we're in this kind of downtrend. Wouldn't be surprised if we hit this 1250 area, which happens to fall right below the 200 EMA, and it'll shake out a lot of weak hands. Right now, we might see another bounce to test this 50 EMA about 1300. But if we hit 1250, that's a very, very strong area of support. Here, and so that's and again here we believe that will be the ultimate bottom, and we'll resume this next leg higher. Gold weekly. This is kind of what I'm pointing to. This is this downtrend. We broke out above it, and now we're shaking out the weak hands. The MACDs are curling towards zero. We believe it's going to actually likely curl back up, or maybe spend a couple of weeks in negative territory, consolidating these gains before breaking higher. But we're still above the 50 on the weekly RSI. Don't let anybody tell you that we're in a bear market in gold. We're just correcting what we believe is the early innings of a new gold bull market. And now this chart looks ugly. In terms of, that's a bearish reversal at the trend line, and so it's possible we consolidate here for a few more months. But what I'm seeing here is that RSI is broken above the 50, and so that's going to result in some consolidation, perhaps above the 50. But this is going to break to the upside, in our opinion. Look at the volume here on gold contracts. I would be buying and adding to positions right now. I would not be a seller unless you're a short-term trader. Taking a look at the junk bond daily, junk bonds are looking good right now. There's nothing to suggest anymore that there is any weakness in the markets or junk bonds. Frankly, they're breaking higher. You might be able to point out that there's a bit of negative divergence here between where price was here, so we had a lower price point and higher momentum. So we might experience a pullback as RSI comes to this point of resistance here. So we'll see what happens here. But from our standpoint, reason why we want to look at junk bonds is kind of get a gauge of what's going on in the credit markets, and they appear to be healthy. Weekly, we broke out of this this bearish wedge pattern. Now we're riding towards testing it from the downside. Remains to be seen. Can it recapture this trend line and possibly expand this uptrend, or is this just a retest and ultimately a move lower? We'll see. Right now, I still see negative divergence on the weekly, so that's an interesting development to keep an eye on. Monthly chart, it's very bullish. There's nothing. We're above 70 on monthly RSI, which suggests it's a long-term bull market until proven otherwise. Crude oil daily. Crude oil has been fantastic. We've been very bullish on crude, and we've made some very good trades in the sector, and we think that this move is just getting started. Don't let anyone tell you otherwise. Daily chart, no surprise, we hit a little bit of resistance at the 53 level, which coincides with that 70 RSI resistance that we've hit multiple times. But we've got positive momentum now. We've consolidated a little bit here. We believe that the move above 53 is coming soon. Crude weekly, this is why we broke out of this downtrend in RSI. Now we're firmly above the 50 level. We're testing 60. That's going to coincide with the 55 level, and we think that this is going to break to the upside. Probably knock out a number of shorts that are getting ready to short around the 200 EMA. We believe we're going to break higher and then probably consolidate down towards the 50 level. So some very good opportunities in energy specific names. And again, why do we like the crude oil from a longer term perspective? Well, this is an inverse head and shoulders that we've been talking about for several months now, and we're starting to break above that, very, very close to breaking above that 50 level on the monthly RSI. Once that breaks, that's when the major moves do occur. So that's when we believe that we're going to break above that 55 level, so stay tuned. NASDAQ daily, we're breaking to new highs here. There's nothing to say aside from, if you're long, stay long. If you're out of it, well, you might want to ride this wave if you're a momentum trader, or perhaps just look at individual positions that are doing well. NASDAQ weekly, again looking to break to new highs. We're still seeing divergence here, so that's another area to be wary of, but prices bouncing off the middle Bollinger Band, and there's no sign of weakness. And monthly chart, we broke down from this bearish wedge, and now looks like we're retesting it from the downside. I mean, from my standpoint, unless we break down below the 70 level on RSI on the monthly standpoint, there's no reason to be bearish or assume any sort of major correction or declines will occur anytime soon. Russell daily, this is a gorgeous rally from middle of August. I mean, we've had basically almost every single week has been an up week, almost every single day, frankly, over the last couple of months. And so many of us could have made some very substantial gains if we rode this particular wave. We look at the weekly, boom. Once we broke out of this area, that 1400 level, it was basically all upside. Now we're on the 1500 level. See what happens here, but we have some very positive divergence, and that suggests that we have more upside ahead in the Russell 2000. Russell 2000 monthly, we're breaking out above that 70 level. That suggests that we have much more upside ahead, and you want to be long this market if you already are. Potentially consider adding names if you are not in this particular market. In the market now, but look at this RSI. It's now rolling back above zero after having this monthly correction, and so this is one of the best sectors, small caps, to be in for this next stage higher in the market. S&P 500 breaking higher. Not going to go into the details, but RSI is now, or rather MACDs are now curling back above zero, and so we expect much higher prices in the coming weeks ahead, and new leg higher coming into play. I think a test towards 2600 is definitely in the cards in the S&P. And the monthly chart, same thing, just very bullish, extremely overbought, but that's when the best gains do occur. And until we have, and this is probably what's very often coined this blow off top. Let's see what happens. Now I've got the tips to 20-year Treasury ratio. This is a ratio of what's going on with regard to inflation, and what we've been pointing out just with as with the 10-year Treasuries. This particular ratio has broken out to the upside. It's consolidating a bit, but the middle Bollinger Band is now curling up. The moving averages are now curling up, and so their inflation is definitely here, and it's coming in full in very strong force. Anyone who doesn't see it is going to be hurt if they're not prepared. You've got this bullish flag breakout here. Now we've encountered some resistance at the 50 EMA of this ratio, but don't be surprised. And by the way, this is what happens when you break above zero on the MACDs. Then you have a pullback. But we're above this breakout zone, and we're going to be going higher in the coming weeks ahead. Monthly ratio, same thing. Bullish flag. When this breaks, expect much higher inflation, and that's very good for commodities. The dollar's decline has temporarily kind of stalled, and now we're bouncing. No surprise, we kind of called this here, kind of an inverse head and shoulders here, and we think that this move has some legs, if not to 90, certainly to 94, possibly to 96. Possibly as high as 97 to wash out the shorts, but ultimately we think the dollar is moving lower in the coming 12 months. This is a weekly perspective. Broke down above this downtrend, and now we're going to make a run towards that 50 EMA around that 96 level, and then we'll see what happens from there. MACDs are curling towards zero. So that's an interesting development. If those cross above zero, expect a fairly strong move in the dollar in the weeks ahead. But a monthly basis is suggesting weakness. So there's nothing positive. You've got the Bollinger Bands rolling over. So even if we test this from the downside, which we expect we will, ultimately we think we're going to see 80s in the dollar as emerging markets become stronger and as the global economy seems to be picking up legs. The VIX, nothing to see here except for the fact that it's showing a lot of weakness, but it's showing some MACD divergence to the upside. So that's interesting. If MACDs can somehow break to the above zero, then we can make a move in the VIX. But until then, there's no reason to be long. VIX weekly, we've still got this downtrend here. Kind of looks to me like a bullish flag, but maybe I'm dead wrong. So we'll see. Until we're above 10, it's still in a downtrend, and the VIX monthly still in a downtrend. Finally, taking a look at the World Index. Now the World Index daily, we had this correction. Now we're retesting 60 from the downside. if we can break it, looks like there's going to be a very nice move. If we can't break it, that will be a sign that world stocks are looking to rest for a little bit. The weekly chart, we broke down below this downtrend. Now we're retesting it from the upside. We've got this three top negative divergence here. So it's going to be interesting to see, is this divergence, is that going to be confirmed? We're going to break below the 70 marker and go lower. Remains to be seen. And on the monthly looks fantastic. I mean, the monthly looks absolutely great. And we're at the 1970 level. Would not be surprised that before this market rally ends, we're going to make a run towards the 2400 level that was hit in 2008. So overall, the markets look bullish. The equity markets, the commodity markets look like they're in a corrective mode, and the fixed income markets look bearish. So we've got inflation around the corner. Emerging markets look strong longer term, and so there are a lot of great opportunities in various different sectors. Stay tuned for our sector videos throughout the week. Please do send us video requests with various sectors that you want us to have a look at, and please subscribe to our videos on YouTube and follow us on StockTwits and Twitter. This has been the weekly market review for September 30th, October 1st, 2017. Have yourselves a wonderful week.